Hi class, so I want to make a video showing an example of how to prepare a balance sheet and then prepare an income statement and then prepare a statement of cash flows. So the first one I want to look at is the balance sheet. So hopefully this kind of example will help you to tackle your homework for chapter 2 and get that successfully completed. So for this one, we're looking at exercise 2.2. It says the night manager of Willis Transportation Service, who had no accounting background, prepared the following balance sheet for the company at February 28th of the current year. The dollar amounts were taken directly from the company's accounting records and are correct. However, the balance sheet contains a number of errors in its headings, format, and the classification of assets, liabilities, and owner's equity. So we see there's only 2 categories here of assets and owner's equity. They completely missed the liability section. So, and there's a couple things wrong. It's not even titled correctly or anything like that. So the very first thing I would suggest doing in this situation is making a list of assets, liabilities, and then owner's equity. So go through each of those and decide which category it fits under, and then use those categories to set up the balance sheet. So we start on that list. First one, capital stock, $110,400. Is that asset, liability, or part of owner's equity? Well, we know it's part of owner's equity, so I'll put capital stock there. Next one is retained earnings. That's not an asset. Remember, that's also part of owner's equity. Next one is cash. That, in fact, is an asset, right? It's our most liquid asset. That will always be listed first. Next one is our building. That is also considered an asset, right? As long as you own that building, it's considered an asset. Next one is automobiles. That's also correctly listed under assets. Next one, what they listed under owner's equity here is we see accounts receivable of $84,000. Well, remember, accounts receivable, it's the next best thing to cash. It's cash that I'm going to be receiving later on from those people that owe me that money. So however many people that refers to, there's a total of $84,000 owed to me. And that is also considered an asset, okay, because it's cash coming to me sometime in the future. So accounts receivable is also considered an asset. But what about notes payable? Remember, the words payable means that I owe money. So note payable is a formal kind of note or formal kind of debt, usually involving interest. And notes payable is considered to be a liability. What about supplies? It's not something I owe, right? And it's not capital stock or retained earnings. So supplies is also considered to be an asset. And what about land? Well, land is not a liability or an owner's equity. It's considered an asset. Now, if I have a mortgage or a loan that I use to finance this land, the mortgage or that loan itself will be considered a liability. But the land, right, the land itself is considered an asset. And accounts payable is also a liability. Remember, it's just a more informal version of debt, like a notes payable, and it is usually short-term and does not involve interest. Okay, so let's use all of those to organize our balance sheet here. Okay, so we'll title it with Willis. I'm just going to shorten it here, Transportation Service. Remember, you want to title it with what kind of statement it is. It's not a manager's report. It's a balance sheet or statement of financial position. Balance sheet. And then we don't do 8 p.m. Thursday, right? We do just a date specifically. So this is prepare the following balance sheet for the company at February 28th of the current year. So the end of February. So probably for the month ended February 28th. Okay, so this is probably a monthly balance sheet. It might be for a year, but we'll just go with month. For the month ended February 28th, and we'll go, let's say 2019. And I do not think I can easily, oh, there we go. See if I can zoom it a little bit more than that. That's a little bit better. Okay, so we start with assets. And we start listing, well, we want to list them in order of liquidity, right? So an asset is liquid if it is cash or is going to be converted into cash soon, right? So we want to list those liquid assets first before the other ones. So the first one we want to list is cash, and cash has a balance of $94,800. What's the next best thing to cash? It's accounts receivable. I'm going to mark these off as I list them. So accounts receivable is next. It has a balance of $84,000. Next one out of these, building, automobile, supplies, land. Supplies is probably going to be the best guess for the next most liquid asset. Okay, supplies. And supplies have a balance of $16,800. And then we're probably going to go with automobiles because it tends to be more liquid than, let's say, a building. It can be more readily converted to cash than necessarily a building. So automobiles, that has a balance of $198,000. And then lastly, or no, second to last, we have our building, right? That's a little bit more liquid than land. Building has a balance of $96,000. And then land. But really, land and building, it's really not. These can be interchanged. When we're talking about liquidity, it really is more really relevant to things like cash, accounts receivable, inventory, supplies. But when you're looking at like vehicles, buildings, land, usually those are listed last. The order isn't that important, but usually you'll do building before land. Land has a balance of $84,000. So now we can find our total assets. I'll go ahead, let's do the math here together. We'll do 94,800 plus 84,000 plus 16,800 plus 198,000 plus 96,000 plus 84,000. So that gives us a balance in total assets of 573,600. All right. Next is our liabilities. We have two of those. We want to list those in order of liquidity as well. And which one's going to become due first? Most likely. Most of the time that's your accounts payable, but you're usually going to list accounts payable first before you list your notes payable. Just common practice. Accounts payable has a balance of $43,200. And then notes payable is next. That has a balance of $345,600. We can go ahead and do a little subtotal for liabilities if we want to, or we can skip that and wait to do the overall total of liabilities and owner's equity. So we'll just keep that. You can go ahead and subtotal that if you want and do like a total liabilities section, but we'll just wait till we get to the very last total here. And owner's equity, we know that's made up of capital stock and retained earnings. Capital stock has a balance of $110,000 or $110,400. And then we have retained earnings. That has a balance of $74,400. So now we do a total of total liabilities and owner's equity. Now let's do that math. Let's see what we get. So we have $43,200 plus $345,600 for notes payable. Add the capital stock balance of $110,400 and then add retained earnings. That gives us $573,600. And the question now at this point is, are we in balance? Yes, we are. Our total assets equals our total liabilities and owner's equity, which means we're good to go. And at this point in the homework, obviously you want to check your work and see if everything's correct, because it's possible to balance but something else be off. But that's essentially the basics for preparing a balance sheet with information that has been organized incorrectly. Okay, so hopefully that helps, and good luck with the homework.